Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Monday, 10th day of July, 2017, and this is the Daily Report for Gold and Silver. We do have moderately higher pricing in the precious metals, specifically gold and silver, with gold trading up about $4 on the day, closing at $12.1340. Now, the low is critically important. We'll talk about that when we pull up our first technical study, but that comes in at approximately $12.04. The high on the day is $12.1590. Net change up about 1/3%. Silver really was shining today, although it is still trading below $16. It closed at $15.61, and that is a net change of 1.2% on the day. So traders, no doubt an interesting day in trading as we start this week off. First chart that we want to look at, and we're going to quickly switch to a daily chart, but this chart that we have up on the screen currently is a 740-minute chart. So in essence, what we're doing is we are breaking the session down into overseas or night European trading and then mainland trading here for the second component of the trading day. What we see when we look at it through half-day candles is that the candlestick pattern we have identified first is an engulfing bullish, that we had an extreme low that was achieved in I call it overnight trading, so to speak, because it's the beginning of the trading day in Australia, Hong Kong, London, then over, of course, to the United States. This is where we have that low in nighttime trading, low of 1204. But what you'll see is when we convert this chart back to a daily, it gives us a pretty interesting candlestick. And that candlestick is derived from this extreme low in trading overseas and the fact that the market had opened roughly in this area. It's a green candle, closed slightly higher on the day, net change on the day $4 after achieving these lows. And so what you get is either a doji-like, and this would actually be labeled a rickshaw man in terms of the type of doji it is, or it is almost a hammer in that you've got a very, very small body and you have a tail below it that is at least 3 times the size of the body length. When we then take that into consideration with Friday's dramatic sell-off right here, what we get is a bullish harami. And of course, a bullish harami is one of the key reversal candlestick patterns that we look for. Criteria is after a defined downtrend. We certainly see that it qualified for that. You get a pretty large red candle, and then following that, you get an inside trading day, and that's exactly what we're going to see here. Now, of course, to actually take this signal, you do want confirmation, and confirmation on this particular pattern would be we want to see a nice move tomorrow, and it would be a nice green candle with a higher high and a higher low than the previous low. And so in that way, we do have the potential to see a buy signal triggered. And we also held that really important area of $1,200. However, there's a caveat to that, and that's what I talked about in my opening letter. And the caveat to that is that for the first time in 2017, and let me go ahead and compress this chart just a little bit so you can really get an idea of what I'm talking about. But for the first time in 2017, we actually have a low that is below the prior low. Because up until that point, if we look at it this way, here's our low of 2016. And from this is after Trump is elected, market comes under pressure pretty much till the end of the year. And then we get our first real rally of the year, takes us off these lows from 1120 up to 1220, a nice $100 rally. So here we get our first low of the year, and that comes in just above 1180. You then get another subsequent rally here. And then as the market comes down, we look at this low. And this low here comes in just below 1200. So from this low to this low, you've got a higher low. Another rally, and then again, a higher low. So for the second consecutive time and for the 3 lows this year, we have had a series. If we look at this low here, higher low, higher low, higher low. And that is absolutely what we want to see in a bullish model. However, on this particular sell-off, this low exceeded, this came in at what, about 12.13, 12.14. This had a low below 12.04. If this low holds and the market does come up, then we certainly still have a lower low. But traders, we do not have confirmation that the selling pressure is over. We have seen on multiple occasions so far during this correction, let me get my pen back up, but points in which we had false breakouts to the upside. Here we had 3 days up, followed by a big sell-off, 2 days up, followed by a sell-off. These are individual up days, so I'm not going to count those. And here you had the market come down. You had 2 days of higher pricing before you had the market track lower. So we need to see a technical confirmation that 1200 is going to hold. We do have the potential for a bullish reversal pattern, but we would need confirmation. And traders, because this market has been under pressure, because of the fact that we have seen a lower low than the previous low, we're going to need very, very definitive confirmation before I recommend and initiate our next long position. We are going in flat to the market, and my recommendation is to maintain our neutral stance. And traders, as far as silver goes, if you take a look at this daily chart, very much like gold now, although silver closed up substantially higher in terms of a percentage gain, up about 1 1/3%, up 20 cents, you can see this extreme low that was achieved last night in overseas trading. We are looking for pivots in both of these markets, and on our next trade, I believe that we will include silver into the mix. In other markets that we follow, a quiet action today in U.S. equities as well as the dollar, with the dollar index closing nominally or fractionally higher on the day at 95.8. Over to U.S. equities and the Dow Jones Industrial Average, that closed at 21,408. Up about 5-6 points, but again, a fractional upside move. The same can be said for the Standard & Poor's 500. That closed at 2427, up about 2.5 points, but it's really the NASDAQ composite that actually gained some ground today, closing up about 0.4% at 6176. So traders, we are looking at a daily chart. This daily chart is of the dollar index. We can absolutely see on today's trading, it, although it's just slightly higher, fractionally higher, it is actually showing a green plus on the day. It is in essence unchanged, creating almost a pure doji on the day. That, of course, is after finding some tentative support just above 9,500. In terms of any kind of real resistance in the market, it's sitting at around 96.15. It is based on a 78% retracement. However, support is quite a way below where the market is currently trading at, which is 95.82. I'm looking at support really as not an area that we'll find until about 94 on the dollar index. Now, in other markets that we do follow, the industrials closed slightly lower on the day, but one thing that we can see is that after falling for a few days, we've really got more than anything else a tight consolidation, and I believe an area in which the market is kind of forming a base of support before moving to higher ground. I don't think that we're going to see the kind of major corrections we have seen in the past and see something more like sideways action as we've gotten here and here. To some degree, this was slightly lower, but here a little bit before moving again to another higher ground stair step. And traders, lastly, do want to quickly take a look at crude oil. Crude oil was slightly higher today, but not by very much, about 32 cents per barrel to close at $44.55 per barrel. It is right at a current level, this being the 38% retracement, and this is a fairly large retracement that we're looking at because it starts back in February of 2016 when the market was trading at an extreme low of 26 up to about 56, and that's where we get this number here. My sense is that we will see lower pricing still in crude, and I'm looking for approximately $41 per barrel. So traders, no doubt we did see moderately higher pricing in gold and a pretty strong move in silver today. But as we talked about when we looked at our daily charts, it in fact is the low that was achieved at 1204 that has me concerned. My concern stems from a technical basis, and it is the fact that for the first time, the first occurrence in 2017, we have had a lower low than the previous low. Now, the lower low was 1213 to 1204. So it wasn't that much lower, but on a technical basis, it is still significant. To the bull side of the fence, it does seem as though $1,200 is a price point we in fact might find support. However, I'm not going to trigger our next trade until we have confirmation, or as I put it, as when we looked at our technical studies, to have that V formation form. In other words, not just a bottom and a little bounce off of it, but we want to see a complete cycle or a V, meaning a confirmation of a technical candlestick pattern. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.